The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. I'm going to go through this right away. This is the Wednesday, July the 2nd edition of the... let's just get this right. Okay, that's it. Of the Tiger Technicians Hour. And I wanted to show you this real quickly because I think things are going to move very, very speedily from here. We've had a digestive phase early this morning, overnight into this morning. But if I'm correct, and even though we bought a little insurance this morning, it's already more insurance, and I have no technical indicator to say that the market should turn around. And I'm anticipating that insurance might go to 1.5%. It's not a big deal because even if the market moves up just a tad, we'll more than make up that 1.5% in the portfolio. I just wanted to be ready because this is at this point, everything is news related. The market's moving up nicely. We had a rotational market yesterday where other areas in the market really spiraled higher based on, I think, kind of an incorrect, just at the moment, an incorrect interpretation that yields are going to go much lower. I think they are going to steady. I don't know if they're going to break up or break down, but I don't think they're going to go that much lower just at this particular time. I think there's enough evidence to say we could get some real mixed reports. And if the Fed then says, okay, now we have enough evidence to say that the economic slowdown has now allowed us to talk about lowering rates, that's something else. And we'll see if that happens. Now, within this context, I wanted to show the E-mini right now to say this 200-period moving average in the 10-minute chart has been resistance. If at any, for whatever reason, I don't care what the reason is, just looking at price, if the price says that the E-mini trading at 62.40 to 62.50 right now is able to clear this first hurdle, just a real initial hurdle right here of 62.53, let's call it 54. If it's able to clear that, and then a little later, I want stair-step moves, and a little later on in the morning, maybe by the end of my show, going into Steve's show, the S&P is not breaking down below 62.40. It's trading right now at 62.50, but instead actually has enough temerity to break above this high that was made this morning at 20 to 8 Eastern time, and that's at 62.57. Let's call it 62.58. If it does that, that's going to be very important in the very near term. Now I can go to everything else. Most importantly, let me go right here. So the Dow, well, first of all, the chart I just showed because I switched over to it is the VIX index, which is up 25 cents at 17.08. At any point in the next few days, going into early next week, the volatility index actually goes to 1985 is the 200-period exponential moving average. So if it starts to trade for an hour or more above 20.25, and the Dow is down triple digits, and the S&P is down more than, say, 48 points or 50 points, that would say, be careful because we're going to start to see further, at least, weakness in the near term in the market. If the VIX index gets back to the 16th at 17.08 now, it's up 25 cents. If it gets back and it goes under 16.83 anytime today, that says it's going to be more upside action. Okay, now let's get to our markets. I want to get this done quickly because I had a bunch of questions. I do want to get to them. Where did I write them down? I wrote them down over here. Okay. And let me just get to it right now. CELH. Question was, how's it doing? Well, it had another buy signal to buy mode and it's gone to a leg D, maybe a peak D today because it's up 22 cents, but below yesterday's high in the 47.60s. Most importantly, it's a leg E in the weekly chart and it's only a leg A in the daily. And this is Celsius Holdings, beverages, manufactures and markets it and distributes. And as I look at it, this is going to be quite important for a couple of reasons. And the most important reason is because it's under the radar. This is in an area where there's a little bit of leeway, I think, in terms of, the cans, the aluminum cans have been a big issue in terms of cost. And you remember, I'd spoken to someone about, what was it, in April, and they said, yeah, we sell a lot in Canada. This is wines. We sell a lot in Canada, and that isn't the issue. The issue is that the price of the bottles has gone so high that that's what's impacting us more than anything else. So it could be, maybe in this particular case, that's not an issue, and it's done very nice. So the question was, I'm still holding long. What do you think? I think you should still keep holding long. If anything, I would treat any pullback to the 44 level as just something to watch, because if it goes down to 43, it says, okay, a little bit of a digestive phase, but really all the way to 42, it's at 46.19 right now, up 19 cents. That's 4 points. It's about a 9% risk, but I wouldn't do anything. Now, usually when a stock's done something so well, and is holding, I say, reward yourself, take a little bit off. I don't know if you've taken anything off just in terms of money management, but it's in an area where I would say, you know what, if you want to take a little bit off, that's fine. I like the chart very much, and it's in an area that I think, as I say, is just at the moment, it's a little bit under the radar, and that's really important. All right, now let's get back to our story. I had some other questions. I'll get to those in a moment, but I did want to go, let's go. The Dow. So the Dow yesterday gets to 40, whoops, let me just get that number. I had it typed, it's typed here, so let me just quickly look at it. It got to 44,604, and it's pulled back a little bit today. It's down, it's more, down 133 at 44,361. I have it, let me just check because I had to modify this just a little bit there. I have it as potentially going to 45,073, the previous all-time high, in the next couple of days. But this Chapman Wave inside wedge target repellent line was hit exactly yesterday, and it's a little higher today. I'm beginning to say to myself that the 9 is over the 14, the price is over the 9. That is really good. The MACD is expanding still. That means the histogram, the vertical line between the two moving averages, is expanding. The relative strength is at a high. It's doing very nicely. The stochastic's flat at 95%. The on-balance volume is the one thing that gives a clue to say a little bit overbought, so you can expect some kind of a pullback, but this doesn't give you any major sell signal or anything. It's just an overbought in the very short term. Looking at the weekly chart, it's already in leg D. It's under the previous high. I'm not a big fan of stocks that go to, or anything that goes to a peak D under the previous high, because it didn't have enough strength. I love when, like the S&P, it powers through the previous high in leg C. That's usually great because it says, well, you should still get a pullback at some point, and then a leg D even higher. So that's very positive. If you look at the S&P right now is up 5 at 6,203, and if you look at the QQQ 1, 2, 3, there we go. As we go to the break, up $1.68. Did make that peak D at an all-time high over the 540.81 February high. So this is all very good action. Not great at this point in terms of where we are, but great in what we've done in a singless, just 2 legs up to the upside. That's fantastic. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I'm just writing this down. A couple of questions came in. I'm going to get to these questions now. One in particular because it's really appropriate because Duncan Steve trades intraday, so to talk about it in 5 minutes' time could be very different to talking about it right now. I just want to mention that the dollar, I said to subscribers that the dollar was about to make a potential trough G, and it's done that. This is where you could have a parallel G/C, but I called it a G in this particular instance, and it's up 40 ticks at 97.05. And that's another reason why I'm looking at this and I'm saying, you know, I'm starting to see signs that other signs that you would not be looking at that just suggest, and that's the only reason why we did add some short position, but it's really, the risk is 1.6% on a 3 times short. It's really a initial starter, but I still see some strength given in the market. So let's get to this. So the SMHs, and this is going to be very important. SMHs, semiconductors are up $1.18 at 277. It made a peak E on the daily chart. It's only a leg B, and that's what I mean. If you can smash through, but you slice right through the previous high, in this case 269.66, it says you're on your way to, if there is another left side high, which there is, of course, at 283.97. That's the high that was made. Did I not put the date in, for crying out loud? That's stupid. July, a year ago. The semiconductors were at 283.97. In the interim, they went all the way to this past April, plunging to 170, over 100 points down. I mean, that's amazing. And it's come back more than 100 points in not a shorter time. Whoa, not a shorter time. It's exactly, last week was exactly the plumb line. Oh, what a nice technique. It was the plumb line exactly to the low of the week of the 11th of April, from the high that was made back in early this year, and it comes right back and it's gone higher. That's how you want to see a move through the left side high. That's really important. Okay, now with that said, Let me just go to a very short term. I'm going to go to the SMHs. SMH. You are using, I can't remember now, you're using the SSOX, I think, and the SOXX. Let's just have a look at that. It's the same thing as SMHs, okay? And the SOXS. So the SOXS is at peak, a 1 minute chart peak A. Looks like it wants to get to a B. It's already down in the 5 minute chart. It's gone peak A, peak B, peak C, and a peak D, and it pulls back. But now it's holding okay at the 200 period moving average. So let me just give you parameters that I would look at. Now, I don't know if you're doing the same thing, apples to apples here. But the SOXS is looking like it's hit the 200 period moving average, which is kind of resistance. So the SOXS, XX, that's the long side, is bouncing off the 200 period moving average. I'm going to make a suggestion here based on the 5 minute chart, which says that AB, if the SOXX trading at 238.35 is able to pop above the 238.68 high that was made 3 bars ago, that's going to be very positive because it'll be a leg C tackling the left side high of 1533. Was that yesterday? That couldn't be yesterday. We were already, at almost the close yesterday. That'll be positive. So as I'm looking at this right now, it seems to me there's a leaning towards the upside, and if the SOXX is able to rally from here, it's going to help the 10-minute chart turn green. What would I do? Right now, they're both at the 200 period moving average. I'm giving the bias to the long side, and the bias says that 238.50 would be my very near-term target. If it takes that out, then 239 a little later on this morning would be the target. Hope that helped you. Next question came in. I'm going to get to all the indices in a moment. Could I look at AGEN? So this is funny because this is AGEN. AGEN is Agenus Inc. Immuno-Oncology. Nice action today. It's up 45 cents at 529. It's coming off this 200 period moving average. It's almost the same as the stocks that we were looking at, the semiconductors. It's coming off this too, except the 5 minute chart is not the 1 day chart. But look at this. This has already gone to a peak ABC. This is a leg D already in a very small series of moves. But here's the difference that I'm looking at in terms of, here we go, A, B, C. Oh, I didn't see that. C minus. So this is a brand new A. I thought that was a little unusual. Here's the real start. This is going to trough A, trough B, and a C. Leg C to the downside. Now it's starting to rally. If at 528, let me just go to the 120-minute chart for a second. Yeah, that's what I expected. Okay, it's a real good sign. Let me just go to the very short term. What are we looking at here? AGEN. Ooh, very nice action. Let's go to the 10-minute chart. The 10-minute chart says, whoops, let's get it. Here's the low. So all you do is you identify the low. I can't put an up arrow here because it's already done its job right there. Now I'm going to go to peak A, P uppercase on the way up, peak B, peak C, peak D, peak E. So this is going to be either an F, right, or a brand new A. This is not the A because the bar that makes the low cannot be the high except at a peak D. So that says this has to be the new A or F. I like the action very much. So the 10-minute chart is very strong, and all I'm going to say is I want to go back. I don't want to just do everything off the 10-minute chart. I do want to go back to the story here and go to the 120-minute chart, and you'll see, look, this went, you're always looking for peak Ds, right? In every single chart, doesn't matter what it is, A, B, C, at least a D, and this could, because it went to a lower low, this starts a brand new, a brand new A. Oh, this is very exciting. Dan, this looks very good. So what I'm going to do is I'm going to say that the left side high that I'd be looking at right now is trading at 537. So this is the trough, this is the peak that I'd be looking at right here. Okay, at 541, and then 545. Sorry, 565. Oh, I made a mistake, right? Yeah, 541, 565. And if today it's able to break above 565, that's going to be very good, because it's telling you that it's going into the body of this ugly candle right here, the candle that after the peak E, that made the peak E, that had a high of 620 and a low of 548. If you can get into the middle of this bar, which is 583, in the next day or so, it would suggest that that leg D should be coming fairly soon in the weekly chart. All of that said, any close in the next 2 sessions, that's today and half session tomorrow, under 470 would say, back to stalling, but this looks very good. AGEN, Agenus Inc., Immuno-Oncology, the Dow's now down only 63, S&P's up 9.11, Basil, Chapman, Tiger Technicians Hour. Oh, more questions came in. I will finish up all the indices as soon as I return.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. A couple of people have shown interest, but I really want to say, if I'm going to do one of my all-morning live webinars, and it could be even longer than that, because there's just so much that I would like to do, and the market has so many different phases. So you remember we were looking at this, and I said if it can get over this particular high that was made at just before 8 o'clock, that would be really positive. Well, we've done that, and it's only in leg C. And look how the 9-period movement, one of the reasons why I wanted to do that and why it was appropriate to, on a very short-term basis, was to go long, is because there's a chance, even though I didn't anticipate we would get, we got the SPXS, the three times short. I expected, because it was at about $3.71, sorry, $4.71 at the time. And I thought, well, if it goes to $4.74 or higher, that means that the market is starting to pull back. And actually, the S&P was holding quite nicely. There were just one or two trades at that particular time. So I've taken it that we did get it and that we did lose it. But I did that thinking that the S&P would, only if it was down much more, would it go to this 4.74 level, because it was trading, it was at the lows and it was still only at a 4.72. So anyway, we did, and we're out. And that's freed us up for looking at the upside. But what I am saying is that there was a suspicion in my back of my mind. There was just a chance, with the Dow still so close to an all-time high, almost, it hasn't got to the magnet point. If it can go about another, it's at 44. Well, 44,605 was the high yesterday. If it can go to a little over that, then the magnet of the previous high becomes, the previous high becomes a magnet. Until then, it's not a magnet. So in that sense, everything's starting to look, like there's enough residual strength, and all those, the analysis that I've been showing you on the daily charts, still has 9-period moving average, very strong. The stochastics are all very, very strong. So this was more expecting that if the S&P did pull back sharper than it did actually, then I wanted to be in the short position. So this was almost like an accident, and he actually got there, like maybe just a few trades were there. Doesn't matter. We got it. We're out. 1.6% loss, but it was just a starter position. I will be looking more at it probably going into next week or sometime. All right, so with that said, let me just finish up here. So gold, has it come back a little bit? Yeah, it's now down only one at 33.48. And look at this chap wave inside track repellent zone. Until it can get to 33.91, if it gets to 33.91, there's a good chance it goes to the upper band of resistance at 34.48. Okay, look at the silver. Silver's trading right now up 18 cents at 36.58. So as I say, we've kept our gold and silver positions, mostly because I feel strongly that there's just enough volatility involved in the market at this particular point for them still to be viable, and silver is much stronger than gold. Look at this. Leg B goes to peak B in the weekly chart, and then it's still holding so well at this particular point. And look at that monthly chart. Monthly chart is still very good. So I'm still more favorably inclined to silver. It isn't strong right now. It's good today, but it needs to really break into the 37, 35 area, and then into the 38 for me to say, hey, silver's on its own trajectory. It isn't on that right now. I want you to quickly look at platinum, because it was a question that came in. Yeah, platinum's gone to a peak D, and the daily is still very strong. The weekly is only in leg B, and the monthly, I can't believe I'm saying this, the monthly is in leg A. Leg A having gone from 900 to 14, 20, what is that, 14, 1440.50. I mean, that is amazing. So it's still very, very strong. There's leg B right there. Okay, next thing I want to look at was GDX. The GDX, the gold miners. Now, this is going to be important because the gold miners is just sitting there up 20 cents at 52.24, not going anywhere after a red candle yesterday, although a higher one, but a red candle. So I'm just looking at this and saying it's just not quite as good a chart as the silver, but it hasn't broken down at all. It's still holding pretty darn well. Crude oil, just as to crude oil right now on the 200-period exponential moving average, up 4 ticks at 65.50. I did the dollar. Look at this. Yes, the dollar is trading up quite nicely, up 47 ticks at 97.12. Where are we? We're looking at, yeah, I think I did all those. Then another question came in. I did that. And I skipped one by mistake. Did I do that? Can I look at, I did the SMHs, but before that there was a question. Oh, Chewy, CHWY. CHWY is trading. Chewy is trading down 31 cents. Yeah. So Chewy went to 48.82 with a 48 round number open at its high, most recent high, not all-time high. All-time high was way up in the 90s. So at 48 round number high, a round number open on the 6th of June, and then it pulled back, and then it had a gap down, and it has tried to fill the gap, but now it's making an arch formation. Now I'd be careful of Chewy. I thought there was a chance if we didn't ever get into it that we would get in on a pullback, but looking at it very closely, something's not right with the chart. Usually in a gap down like this, either it takes out the gap bar low, and that makes the whole bar resistance, or it goes above it, and then it doesn't come back and fill the gap. Well, it's come back and it's into the gap. So this is, I cannot rule out a peak B minus occurring if there's a dreaded H pattern. So all I'm going to say is Chewy was looking very good. It looked fantastic. We didn't get in. I kept complaining, and then suddenly there was that bad news, and whoosh, it goes from 48 down to 39, and now it's had a little bounce to the 42s, 43 area, and it's arching up. I'd say hold off if you are short. I don't know, it was just to have a look at it. Short term, I would suggest that if it takes out today's low in the next, today or tomorrow, 40.86 is the low. If it goes below that, then there's a real good chance it's going to test the low of the 11th of June at 39.63, and that's going to be the clue. If it doesn't get there and then bounces, it goes to a lowercase h that makes the lowercase m, eventually testing the left side low. But if at any point in July, if it closes on a weekly basis above 44.60, that's going to be the first sign of residual strength to say what happened before was past, it was history, and now we're looking at something very different. It's become positive, but it hasn't yet. So with that said, we're going to go to a break. Down 36, S&P's up 13. Basil, Chapman, Technicians Hour. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So a couple of questions have come in, but one question started off, not question, but a whole bunch of questions from a subscriber, but I've spoken about it as if it was a public question. And that is essentially saying, if one has an IRA, what would you do when you start to get sell signals? Would you take something off? Would you put stops in? How deep do you think it's going to be? So let me just answer that first of all. And this is really just my opinion. How the hell do I know everything? There's no way anybody can really know. You can only do your due diligence and anticipate that somehow or other that's what's going to, it's a little go-kart, and these are little bumpers that you're looking at to see whether you're still on the straight and narrow, okay? So as I see it, looking at the big picture, and I'll do this very quickly because there's still many, many questions to get to. So let's just go to the S&P for a moment. Today, it has just gone, I believe it has gone to 62.13 is above 62.15.08. It's got a little bit more to go to get to a leg D. But I'm looking at the weekly chart. I wouldn't do anything. For all those people who've done nothing all the way through, you're looking at a portfolio that's been gaining very nicely. If you had gone into the short side, and even though we lost just tiny little bits, we made some and we lost a little bit, mostly in some areas we made, and then we lost on the short side. It was a waste of time. We could have just stayed long. But how do you know? You've got to deal with the market. You want to feel that you have some control in the market, that the market doesn't have control of you. That's the most important thing. You want to be able to sleep at night saying, I've done my stuff. Now, market, you do yours. So I'm just saying I wouldn't talk about a stop. When we get some sell signals, I'll talk about where you would put a stop. But I would say that there are some people over the at least 20-something years that I've been here at TFNN have said, when you put in a stop, that's usually where I want to be adding. So that's not the case all the time, but this is just kind of as a general thing. So I'm just saying that I would have a tough look. All of a sudden now, the Dow was doing quite nicely. The market was doing nicely. Suddenly there's this big red candle. So it's taken any short-term gains that you might have made, and it's made them much smaller, right? But is this just a one-off? Is this just a news event at a leg F in the 1 minute chart, a peak D maybe in the 5 minute chart, but only a C with a chance of maybe going to a D still in the day in the 10 minute chart? Who knows? So you want to just be prepared for that. So what I'm going to say is I will, for subscribers, I will tell you where I think the key support area is. The first is in the S&P at 5900, let's say, in the 9-period exponential moving average in the monthly chart, and then 5750 at the 14. We haven't even got there yet. So I'm just saying, don't mess with that. In short-term trading, you do other things altogether, just like we did today. So in this particular instance, what we're looking at is the chance that I'm thinking that there's going to be some news that'll give us that dark news cloud cover, and the market won't just pull back for a day or two because everybody who's missed will be wanting to buy as it keeps going down. Then all of a sudden they say, oh, that was a mistake, I've got to be selling, and that's when we get that climactic low. So all I'm doing right now is I'm saying all the biases are to the upside. So we'll get to that. For IRAs, at this point, do nothing to stay in those positions. Here's the other thing. A question came in about Hood. H-O-O-D is the symbol, Robin Hood. Gone to an all-time high. And you remember I said to subscribers, and I mentioned this yesterday, that stocks that go to the 95s, 96 area, very often, quite quickly sometimes, get to 105 to 106. I just didn't anticipate. We've been long since the 60s. We're not as long as we should be, but we are long. And here it is at an all-time high. Robinhood trading at $99.48, up $7. I don't know what's going on here, but I'm not complaining. I'm complaining because we don't have more than we have, but that's a nice problem to have. Well, in the meantime, and this is a leg G/B. You hardly ever get G's like this in the weekly chart, so I'm suspecting that this is a B in the weekly chart. So that's what's just happened. A nice move up, and now you're looking at key support. If there's a more serious sell-off, the 84 14-period moving average number right there, 84 to 80. No, to 78 is kind of the area of key support that I'd be looking at. I don't know if this is the move that takes it to 104, 105, but this is what I had mentioned yesterday or day before, saying stocks that get to the 95 area, just looking back, I haven't proved it, but I'm just saying in my memory, stocks that get to 95, the next thing you know, they're up at 105, 106. When they get to 120, those stocks don't go back to those double digits for a long time. That's kind of the way markets move. Anyway, so next question came in. Did that. I will go to the FXI in a moment. Did that. Okay, so we were looking at the SOXX, and I said that's the side that I was looking at. So let's just see where that went to. SOXX. SOXX, there it is. So that's in a nice move to the upside. Yep, it's gone to that level. Remember, I think I said the 240 level. So yeah, it's at 240.57. 240.89 is the Chapman Wave automated resistance level in the 1 minute chart. All right, so that was that. Now, next thing we want to look at is that. Oh, FXI. FXI is the large cap China ETF. It's the iShares, and it's trading sideways. Remember I said that I was wrong. It did not arch over and go to that left side low in that Chapman Wave unconventional fat-based restart. The pattern I'm looking at still suggests that in July, the 34s should be hit in the FXI. That's the way it looks, even though it was wrong on the shorter term. In the meantime, but that's negated by a move that takes out 38. And it's at 36.59 right now. So that's 2 points up, 2 points down, or less than 2 points up. So yeah, that's the way it's looking, just sideways for the iShares. Next other question is, where did I write it down? Yeah, so so as you can see today for that questioner, the SBXS is what I've been using. And I might go out of this, I might go to something else, but I was just using that because it seemed to me kind of intermediate between the Dow 30 and the larger composite of 200 or even the 100, the characteristic of the 100. The S&P seemed to me to be the right one. Didn't work now. I don't mind because things have gone much higher. Basil, years ago, you had a very long seminar, Master Trader Series. Yes, I used to have a trader series for the Chapman methodology. It was an all day from like 8:30 in the morning until 4:30 in the afternoon. It was on a Monday, level 1. Level 2 was on a Tuesday. And for those people who have taken my courses before, on the Wednesday, there was a much more comprehensive, higher level, level 3. And that was on the Wednesday. And I did it so many times and so long. I think that's the reason why my voice today is still quite scratchy. It was very hard to do. So I don't know if I've still got the archives of that. I probably would be able to find it somewhere, but it would be just the charts, not the whole thing. And that was archived in TFNN. I don't know where it is anymore. But I'm intending to do something close to that at some point in the future. We'll talk about it. In the meantime, the Dow's come back nicely. The S&P's up 16, Dow's down only 44.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, let me just finish this here. I just wanted to put something in here. Trading 771. Yeah, so this is very interesting. So Marty in the den wanted to know if I would look at, BBAI. So BBAI is Big Bear.ai Holdings, does basically specialize in national security, the software and all that. So I liked it for a long time. We have someone in the Dan who's been looking at it for ages, and then other people started looking at it. But I've had it on because it showed up in my screamer list of stocks under $10 quite some time ago. So I've just been following it. So it held so well, and I looked at these candles where it shoots up and then it pulls back, shoots up and pulls back. But the way it acted a little earlier on in June I liked it very much. So right here, we went long at $5.05, and that was June right there. So we're looking at the same day. I wanted a pullback. Well, the pullback was much deeper. I wanted 2 positions, but we only got 1 because it shot up even higher than it pulled back. So the next thing was that we were in it. So we took profits. We took a very quick profit of 15%, and then we took another one for 28%, I think it was, yesterday. And I said it's still holding really well, but it is so volatile. So it screens up. It pulled back yesterday, but it held. It was an inside day. It held very nicely at the low. And today it's up another 16% at $7.72. What do you do with stocks like this? They are crazy. When you have to do your analysis, you have to be prepared to put a stop in, and then you've got to organize it very quickly so that your core position, if you're lucky enough, we've got a core now at, at $5.09. That's at least the core. Now we've got a little room to breathe, but it's spectacular action. So I'm anticipating that if it can hold on a closing basis in this chart, this monthly chart, if it can get to $7.90 and hold close there, there's a real good chance it will retest the 10s very quickly.